I'm Matt Bishar with REIT.com here in Atlanta for REITWorld 2014, NAREIT's annual convention for all things REIT. Joining me for this CEO Spotlight is Steve Grimes, the President and CEO of Retail Properties of America. Steve, thanks so much for joining us.
Thanks for having me.
What is the significance of the company's second investment grade rating?
Significance is huge. Now that we have the second investment grade rating, we now have the ability to access the unsecured bond market, which was one of the primary objectives of the company at the time of IPO. We wanted to avail ourselves to all forms of capital so that we could lower our cost of capital so that we could drive better long-term returns for our shareholders and drive value for the company.
What are your expectations for the company's portfolio growth in the near term? Are you expecting better returns from acquisition, development, or maybe a combination of the two?
So at our Investor Day in June of 2013, we announced a pretty broad repositioning plan for the portfolio, and pleased to say that in just short 18 months' time, we've made significant progress along that front. You know, that being said, in 2014, we expected to be net neutral on our acquisitions and dispositions, and we're just about there, but we did announce on our call recently that we would expect to be a net seller next year. So that would imply that we think that the disposition market is more opportunistic for us right now as we move forward with our long-range strategy of repositioning into 10 to 15 markets, about 3 to 5 million square feet per market. So we do see that it is robust in terms of the disposition opportunities for us in 2015, as well as we do have a pretty good pipeline from the acquisition front, but we're remaining very disciplined in making sure that we're allocating cost of capital appropriately over the long term.
And lastly, as the holiday shopping season's right around the corner, and of course 2015 shortly after that, what is your overall outlook for retail fundamentals?
Retail fundamentals appear pretty strong. There has been this slow but promising recovery over time. There's been a lot of discussion about omnichannel. I think retailers have done a great job of embracing the omnichannel, bringing technology into the store, making sure that they're connecting with the consumer, dealing with the fact that there may be price matching needs as it relates to online shopping and being competitive from a pricing perspective, but then that means that they need to manage their margins better. And I think they've done a really good job of doing that. Holiday sales are expected to be strong, I think a little north of 4% increase from last year, which was also strong. And as we move into 2015, I think those fundamentals will continue. I think the retailers have finally figured out how to manage the omnichannel, online, brick and mortar dynamic.
Steve, thank you so much for joining us.
Thank you very much.
For more on this and other REIT news and analysis, be sure to visit REIT.com.